Okay, so you're here with us on the deep dive because, well, let's face it, your portfolio took a pretty big hit recently.
Yeah, 30% drop in just 2 days is
It's enough to make anyone want to take a closer look.
definitely. And that's what we're going to do today, a deep dive into,
And what's really going on and whether this is just, a temporary blip.
right, or a sign of something more serious.
Exactly. So we'll be looking at some notes that you've made about what you're seeing in the market.
And some excerpts from articles about tariffs and their impact.
We'll even be channeling a bit of Charlie Munger to see how he might approach things.
Sounds good. The goal is to help you really understand the situation.
Yeah, so you can make the best decisions going forward.
Right, not just react emotionally.
Okay, so that 30% drop,
Yeah.
that's going to be a little unnerving, right?
Or absolutely.
Yeah.
It's natural to feel uneasy when you see that much value disappear so quickly.
But you made a really interesting point in your notes.
Oh, good eye.
You said that if the underlying fundamentals of your investments haven't changed.
Then this volatility might just be what you called stochastic noise.
Ah, yes. That's the idea that sometimes the market moves in ways that don't really reflect the true value of the underlying assets.
So it's like a temporary distraction. Yeah.
Exactly. The fundamentals are what really matter in the long run.
And that brings us to these tariffs.
Ah, yes, the elephant in the room.
Our sources make it pretty clear that tariffs can have a real impact on stock prices.
Oh, especially for companies involved in international trade.
Exactly, because tariffs can increase costs
And reduce demand.
and even lead to retaliatory tariffs from other countries.
A whole chain reaction.
And one of the excerpts even explicitly stated that these new tariffs have caused extreme market volatility.
That's because tariffs introduce a lot of uncertainty into the market.
Right, and uncertainty makes investors nervous.
It makes it harder to predict what's going to happen, which can lead to more volatile price swings.
So given all of this, what should investors be focusing on right now?
Well, first of all, it's important to remember your long-term investment goals. Right. Don't let a short-term drop derail your long-term plan.
Exactly, and if your time horizon is 5 to 10 years,
As yours is.
then short-term fluctuations shouldn't necessarily cause you to panic.
But you do need to take a closer look at the individual companies in your portfolio.
How are they positioned to handle these new tariffs?
Right. Are they financially healthy?
Do they have low debt levels?
Can they maintain their profitability even with increased costs?
And most importantly, do they have a strong competitive advantage, or what we like to call an economic moat?
So it's about stress testing your investments.
Exactly, making sure they can withstand the potential headwinds.
And diversification is also important, right?
Oh, absolutely.
Sure.
A well-diversified portfolio can help mitigate risk.
Because if one sector is hit hard by tariffs,
Others might not be affected as much.
and above all, it's crucial to avoid making emotional decisions,
Yes, don't let fear lead you to make impulsive moves.
like selling everything at the bottom of the market.
Stick to your plan,
And stay informed, but get your information from reliable sources.
not just the sensationalized headlines.
Now let's talk about Charlie Munger.
Ah, the voice of reason.
How do you think he would approach this situation?
Well, I think he would start by looking at the long-term consequences of these tariffs.
Not just the immediate market reaction.
Right. He would want to understand how tariffs might reshape global trade,
And he would be particularly interested in those second-order effects.
the unintended consequences that can ripple through the economy.
Like a tariff on steel leading to higher car prices and job losses in the auto industry?
Exactly. He's always thinking several steps ahead.
And given his views on global trade,
Yeah, he's a big believer in free trade.
I imagine he wouldn't be too happy about these tariffs.
Not at all. He's famous for saying a good settlement is better than a lovely world war.
So he would see tariffs as a step in the wrong direction.
Definitely a move towards more conflict and less cooperation.
And from an investment perspective,
He would be focused on fundamental value
looking for companies that are being unfairly punished by the market.
and that have the strength to weather the storm.
So he wouldn't be panicking.
No, he would be looking for opportunities.
And what about his views on China?
He's always been a proponent of closer ties between the U.S. and China.
So he wouldn't like to see tariffs damage that relationship?
No, he believes that increased trade is beneficial for both countries
So in essence, Munger would be urging us to stay calm
and to focus on the long term.
and to remember that market volatility is a part of investing.
It doesn't mean that your entire strategy is wrong.
So bringing this all back to you,
Yeah.
the key is to apply these same principles.
Don't panic.
Take a deep breath and reevaluate your investments.
Ask yourself if the reasons you invested in those companies in the first place are still valid.
Have these tariffs fundamentally changed the long-term outlook?
If not, then maybe this is just a temporary setback.
And if you're still feeling uncertain,
Talk to a financial advisor.
someone you trust who can help you make sense of it all.
It's always good to get a second opinion.
This has been a really helpful deep dive.
I agree. It's given me a lot to think about.
Me too. And I hope it's given you some valuable insights as well.
I think it has.
So until next time,
Stay informed.
and stay rational.
And don't forget to check out our show notes for links to all the sources we discussed today.
See you next time.